Nate Anderson was the most feared man in finance. He didn't run a billion-dollar hedge fund. He didn't have a team of lawyers or any powerful Wall Street connections. His only weapon was the truth. In just 8 years, from a cramped desk in Manhattan, he exposed $100 billion in multinational corporate fraud and brought some of the world's most powerful CEOs to their knees. He was Wall Street's giant killer. His reports triggered investigations, charges, and criminal convictions and made enemies from boardrooms to government agencies. Anyone with anything to hide was afraid of him. People called him ruthless. They called him reckless. Sometimes, they even called him a hero. Then suddenly, at the peak of his power, he quit and walked away. Anderson insists he left on his own terms to spend more time with his family. But many believe he was pushed out. Others think he saw what was coming and got out before it was too late. This is the story of the rise and fall of Nate Anderson, the man who declared war on Wall Street. Anderson grew up in a quiet Connecticut town. His dad was a college professor, his mom a nurse. He went to an Orthodox Jewish day school, a place that emphasized discipline, deep thinking, and serious study. Later, he studied international business at the University of Connecticut, learning the ins and outs of finance, regulation, and global markets. Early in his career, Anderson worked behind the scenes, analyzing financial data and digging into companies on behalf of wealthy investors. Eventually, he launched his own firm, Clarity Spring. It focused on due diligence and sniffing out fraud for hedge funds. Anderson decided to specialize in financial fraud after being inspired by Harry Markopolos, the man who played a key role in exposing Bernie Madoff's infamous Ponzi scheme. In 2016, Anderson and Markopolos teamed up to submit a whistleblower report to authorities, uncovering fraud at Platinum Partners, a hedge fund operating much like a Ponzi scheme. However, fraud reports couldn't pay the bills. By 2017, Anderson's firm was nearly broke. Living in Manhattan, he was behind on rent. Eviction notices started to arrive, and he was seriously considering giving up. Instead, he took one last shot and ventured into activist short selling. What is short selling? It sounds complicated, but it's really not. Think of it this way. Let's say your friend has a football ticket for Friday night's game. You borrow it from him, promising to return it before kickoff. Then, you turn around and sell that ticket for $50. But you're betting that, by game day, ticket prices will drop. So when prices fall to $30, you buy another ticket, give it back to your friend, and pocket the $20 difference. That's short selling. You borrow something. You sell it immediately, betting its price will fall. When the price falls, you buy it back cheaper, return it, and keep the profit. But if the price goes up instead of going down, you lose money. And in theory, you can lose an unlimited amount because the price can keep rising forever. It's risky and it's controversial because you're betting on failure. You're betting that a company is worth less than what people think it is, or worse, that it's a fraud. Activist short sellers take it a step further. They don't just place the bet, they speak out. They publish research reports, expose red flags, and try to convince the public that a company is in trouble. Anderson didn't want to bet against honest companies. He wanted to expose the ones that deserved to fail, the ones built on lies. In 2017, Anderson founded Hindenburg Research, which he named after one of history's most famous man-made disasters, the Hindenburg airship explosion of 1937. Almost 100 people boarded that enormous hydrogen-filled balloon, believing it was safe. They were wrong. Anderson believed the stock market was full of modern-day Hindenburgs, companies that looked amazing on the surface, but were disasters waiting to happen. His job? Find them and expose them before they blow up and take investors down with them. But the early days were brutal. Anderson ran Hindenburg from a small WeWork office in Midtown Manhattan. He had no employees, no funding, and within months of launching, he was hit with 3 lawsuits from companies he targeted. The legal costs were crushing, his rent was overdue, and he was dangerously close to calling it quits. "If my next short didn't hit," Anderson later said, "I'd have to get a real job." Then came his first big break. In December 2018, Hindenburg released a report on Aphria, a Canadian cannabis company. Anderson accused the company's insiders of using shell companies to siphon money away from shareholders. Investors panicked. Aphria's stock plunged 30% overnight. The short bet paid off. The profits were enough to keep Anderson in his apartment and keep Hindenburg alive. It wasn't a massive payday, but it was proof that his strategy worked. Anderson had found his calling: short the stock, expose the fraud, then take the profits. This was just the beginning. Soon, Hindenburg would become one of the most feared firms on Wall Street. But in those early days, it was just Anderson, his laptop, and a belief that the truth was worth fighting for. In 2020, investors were looking for the next big thing in clean energy, and they thought they'd found it in Nikola Motors, a company that promised to revolutionize trucking with hydrogen-powered vehicles. Loved by retail investors for its bold vision, the company quickly gained popularity on platforms like Robinhood. At its peak, Nikola was valued at over $30 billion, surpassing the market value of Ford. But Anderson saw through the hype. For months, he quietly dug into Nikola's claims. He spoke to former employees, analyzed technical patents, and what he found was shocking. Nikola's star product, the Nikola One truck, wasn't powered by hydrogen. It wasn't powered by anything at all. The truck featured in their promotional video, it wasn't driving, it was rolling downhill. Gravity was doing the work, not innovation. Anderson published his report in September 2020. The impact was immediate. Nikola's stock plunged. Trevor Milton, Nikola's founder and CEO, resigned days later. The SEC and DOJ launched investigations. Milton was eventually convicted of securities fraud and sentenced to prison. For Anderson, it was the shot heard around the world. He was no longer just an anonymous short seller working from a small WeWork desk. He was Wall Street's most feared man, and he was not done. In 2023, he turned his sights to India's richest man, Gautam Adani. For years, Adani's empire had been untouchable, a vast web of companies spanning energy, infrastructure, and logistics. The Adani Group was worth over $200 billion. Anderson was suspicious. Adani Group had too much debt, and its stock seemed inflated. He and his team scraped entire corporate registries. They traced shell companies. They followed money trails designed to confuse regulators. In January 2023, Anderson published a report accusing the Adani Group of stock manipulation and accounting fraud. The fallout was swift. Investors panicked. Adani's companies lost over $100 billion in market value in a matter of days. And once again, Anderson was at the center of a financial firestorm. He had taken investigative research to a whole new level. Anderson used tactics more common in spy thrillers than on Wall Street. In 2022, while investigating a suspected Ponzi scheme, he chartered a private jet and outfitted it with hidden recording equipment. On board, a company representative pitched a deal, unaware that every word was being secretly recorded. He didn't stop there. Anderson hired journalists, private investigators, and forensic accountants to uncover what most firms missed. His team posed as potential investors. They cold-called former employees. They dug through mountains of public records, searching for the one thread that could unravel entire companies. It wasn't just analysis, it was detective work, and it made Anderson's reports impossible to ignore. He wasn't waiting for regulators to do their job. He did it himself. His methods worked, and in 2023, he set his sights on one of Wall Street's biggest names, Carl Icahn. For decades, Icahn was seen as an investing legend, but Anderson claimed that his company, Icahn Enterprises, was running a Ponzi-like dividend scheme. He claimed that Icahn was keeping the company's stock price high by paying investors big dividends that the company couldn't really afford. The result? Icahn Enterprises stock plunged nearly 50% in just a few days. Carl Icahn himself lost $3 billion in personal wealth. Anderson had become a force to be reckoned with, but it came at a cost. The lawsuits piled up as companies sought to silence him, but Anderson remained undeterred, navigating the constant legal threats that shadowed his every move, and the personal toll was mounting. "I've spent most of the last 8 years either in a fight or preparing for the next one," Anderson later said. Every report brought new enemies, new threats, and even as he racked up victories, the cracks were starting to show. The cost of victory was starting to outweigh the thrill of the hunt. By 2025, Nate Anderson had become the most feared man in finance. He had taken down Nikola. He had exposed Adani. He had shaken Carl Icahn. He was Wall Street's giant killer. But no giant killer lasts forever. Anderson's war on corporate fraud came at a cost. For 8 years, he was buried in lawsuits, legal threats, and enemies who wanted him gone. The world of activist short sellers was crumbling. Melvin Capital got crushed by the GameStop short squeeze. Billions of dollars erased in days. Citron Research tapped out too after relentless backlash from online traders. Even Jim Chanos, the man who took down Enron, shut his fund after 30 years. Anderson was the last man standing, but the writing was on the wall. Short sellers weren't seen as truth tellers anymore. To millions of retail investors, they were the enemy, betting on failure, cheering for companies to crash. Anderson wasn't just exposing fraud, he was wrecking dreams. To the retail crowd, it didn't matter if he was right. It mattered that he profited while their portfolios bled. He wasn't seen as a whistleblower. He was a market manipulator. Another suit from Wall Street, shorting their favorite stock and crashing the party. He told the truth in a market that wanted to believe in fantasy. And in the eyes of millions of believers, that made him the villain. Anderson had survived longer than most, but in 2025, he made a shocking announcement. He was shutting down Hindenburg Research. He said he was tired of the fights, tired of the stress, tired of the endless war that came with exposing fraud on Wall Street. "We accomplished what we set out to do," he told the Wall Street Journal. "We showed you can build a business hunting fraud and win." Anderson said he was ready to move on, ready to spend time with his fiancée and child, ready to travel, and ready to invest his fortune quietly in low-stress index funds. He even promised to release Hindenburg's methods and training materials so that others could carry on the work. It sounded like a clean break, a victory lap, a man walking away on his own terms. But not everyone was convinced. Why would Anderson shut down Hindenburg at the peak of its power? Why walk away from a firm that was, by all accounts, thriving? Was it really burnout? Or had Anderson been forced out? Some speculated that Anderson had crossed the wrong people, powerful billionaires who didn't appreciate having their secrets exposed. He had made enemies from India to China and across Wall Street. He had accused some of the world's most powerful men of fraud. And then there's the simplest explanation. Maybe he'd made enough money. Maybe he'd won, and he got out while he still could. But for a man who built his career exposing secrets, some couldn't help but wonder, what secrets was Nate Anderson keeping? Did he walk away, or was he forced out? We may never know.